Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com, your one-stop shop for all things trading. drstoxx.com if you want to join me and a great group of traders in our live trading room. If you want to watch over my shoulder and see what I'm trading, I give you my ticker symbol, entry price, stop price, target price, reasons for the trade, for everything that I'm buying and selling. And we do stocks, ETFs, and micro e-minis in the live trading room. We do options in the live options room. And if you want to join either or both of those, click on the subscribe menu, scroll down, and you can add on the second room at a 40% discount. If you're looking more for a weekly or weekly or daily stock pick letter, then click on the stock pick advisories tab. All right, let's take a quick look at indexes. We do have a modestly upside market today after a relatively week last week. Last week was a relatively weak week for the market. The S&P lost about 75 basis points, NASDAQ a little bit more than that, the Russell a bit more than the NASDAQ. So it was a weak market all around, but we were expecting that. It's a weak time of the year seasonally. We had gotten a little too far ahead of ourselves. The market is needing to price in a number of things, and some of the data points we got out last week, not all that great. Some were a little bit too good, and some were not good enough. And this week we have ISM for manufacturing, ISM for services, and all the jobs data that starts coming out tomorrow through Friday. We also have a bunch of Fed speeches. And the last time Jay Powell spoke was, what was it? Last week, right? Early last week. The market tanked on what he said because he said the stock market is overvalued. Okay, dude, keep your opinion to yourself because we taxpayers don't pay your salary to tell us that the market's overvalued. You just worry about inflation, okay? Anyway, it is what it is. The market needed to come in a little bit. In fact, it's given us some pretty decent setups in a number of key stocks. And we were out doing some buying last week on the dip. We did a little bit more buying this morning. And we're in pretty good shape right now to enjoy this market run. Let me just take a quick look at the indexes. So here's that little slide, 3-day slide last week in the S&P 500. We had a nice reversal on Friday, an inside day bar, and a little bit of follow through today, although it's off the highs. And volume is about on average, on par for average, after several above average days last week. The NASDAQ is looking pretty similar, right? 3 bars down, inside day bar on Friday as a hold or reversal, and then a little bit of follow through today. But again, we're off the highs. The Russell 2000 is the weakest of the group. It had the sharpest pullback into the rising 21 period moving average, another inside day bar on Friday. Not really much of a follow through today. So if you have to buy an index, I would go with either the S&P 500 or the NASDAQ. Both of those are pretty nicely set up for short-term pop. I would not get into the small cap index just yet. Its day is coming, but I think we've got it maybe another week, maybe 2 weeks of some choppy sideways, slightly bearish action in the small cap index. But it's going to be a good play for probably the rest of the year. The Dow Jones, also not a bad place to park some cash for a while. I'm long the UDow from a trade we had on last week. I have a little bit of the MYM, micro e-mini as well. I'm just going to hang on to this. I'm doing that in the Dow Jones because in part it does have the big blue chip tech stocks at the top of the index. Microsoft and Apple, Google are all there. But it also has some of the lagging sectors that I think are ready to play some catch up, including energy and healthcare and some industrials. Okay, enough of the indexes. Pretty much the bottom of the line here is that we are still in a bull market. There's no sign in the chart that we are near or at a top. And every dip that we get is a buy the dip opportunity until further notice. All right, we clear on that? Bull market, bull market, bull market until further notice. All right, let's take a quick look. I want to show you a couple of lists here. So I was on Investors Business Daily, their Friday live show, as a guest, and had a really great time. I love being on that show. Great group of panelists, and then I get to throw out the stocks I'm most interested in. So I wanted to show you a few stocks that I talked about there on Friday, and a handful of stocks that I talked about the last time I was on the show and how they're doing since then. So I did focus on Laser, which is a stock from the IBD leaderboard. It has a proprietary set of lasers that have various applications: industrial, defense, and military. They have military contracts with the government, always a good thing, and new applications in the medical field. So surgical instruments that are laser driven, and they're the first mover in this space. They're the best of breed in this space, and I just management is very good. The profitability is very good. The growth is very good, and we had a little dip last week, which was a very nice place to get long laser. I bought it a few weeks ago when it was down here in this little pocket, which rallied up high and then came right back down again. So I'm kind of at break even on my trade, maybe a little bit of a profit here. So I'm long this one. Let's see. I also featured Futu, which is the Chinese hood, the Chinese Robin Hood. And in fact, I think it's a better play than Robin Hood right now, near term. I know it hasn't been, Robin Hood is way up today and Futu is down today after a gap and crap kind of move. But if you look at just the fundamentals, Robin Hood, their new, their amount of money under management, or the amount of money that's trading in Robin Hood, has been falling. I'm sorry, let me take it back. It hasn't been falling, but the growth rate has been slowing down. Whereas Futu, it's just the opposite. The amount of money under management or invested or on the trading platform is not only higher than it was, but the great growth rate is accelerating. So that's a good thing. Also, with Futu, it's a Chinese property. So the Chinese stocks, the Singapore stocks, the Hong Kong index, they're all there for your average Chinese user of the platform. But then they have a whole nother platform with 50% of users on it for American and European stocks. So you've got a lot of Chinese who are living abroad, right? A lot of Chinese here in America, a lot of Chinese in Europe. Now they have a platform that is specifically designed for them in their language that also trades both Chinese stocks back home and European and American stocks, and it's become very popular. So I think Futu has a very good future. It's at a better price point now in terms of valuation than Robinhood is. But Robinhood, I'm also long Robinhood. It's a great long-term play as far as I'm concerned, and I'm not selling my shares anytime soon. I also focused on this one Dave on Friday, and it was kind of gap and crap today. I'm not sure what's wrong with it here, but it is what is Dave? Dave is a fintech play where they have a banking arm, they have a credit card service, they have a subscription service for a budgeting software, which looks really cool. They have a really interesting product line called Side Hustle. And if you subscribe to Side Hustle, you can list your unique talents, and then you get matched up with people that are looking for freelance work that that you can supply. And then you negotiate your price, and it's kind of like Fiverr, but it's specifically for freelancers who are looking for a secondary gig in addition to their primary job. So it's really interesting that. And then they also do buy now, pay later kinds of loans. So it's kind of like a Sophie meets Ali play. And in fact, the growth is better with Dave and the valuations are better with Dave. So I like Dave. All that's to say, I like Dave. Now, a couple of plays that I talked about both the last time and the previous time I was on, I was talking about Iran. It was down here in June when I first put it on, when I first brought it to the attention of the show at $9 a share, and it's down now above 45. That's been my most successful play. And my worst play was this biotech play in XL. So it was doing really well, right? I mentioned it right around in here, early June, shot way up, came down, shot way up, came down, shot up again. And then they came out on earnings and announced that they were canceling one of their trials because the data wasn't very good. They have to revamp everything. That caused a big sell-off. Now it's trying to climb back higher. It's got a big green stick looking today. It's not too far from where I mentioned it back in June. Well, it is a little far, a couple of bucks underneath, about 5% underneath where I mentioned it. But I would just kind of not play this one, frankly, until things get more on track. I did mention Micron 2 shows ago. That was back here in June. It was at $97 a share. Now it's 163. That's a successful one, and I think it's setting up again for another move higher. I mentioned really quickly Snow. I have shares of this in my long-term account, and it's doing a nice looking little wedgie thing here after a power gap, right? Power gap up on earnings, never close that gap. That's always good. Staying above mostly the 21 EMA, getting very tight. And we are long this one in the live trading room using a leveraged ETF. And I mentioned laser. Did I mention laser? I guess I did mention laser already. Also, AMD was in the 2 shows ago when the price was right around here at 96, and now it's at 162. It did get as high as 180 and change, and it's just building this nice little sideways channel right here. So it broke out of the pullback, and when you do get a breakout of a downtrending wedge or a falling wedge or a falling triangle, or falling channel. It can either go way up really nicely or it can go sideways for a while. It's typically one of those 2 patterns. They rarely continue to go down. So that's the good news, is that we're long and it's only going sideways. But we're still kind of patiently waiting for this to get nicely above the 21, which is where it is today, then back above the 50. And if it gets above the 50, we should see a nice short squeeze move on that one. I do think Amazon is one of the better of the mag plays. It's rare to find Amazon in an uptrending mode where it comes down to the 200 period moving average. It got there last week, it got there a few weeks back, and it got there a few weeks prior to that. And every time it did, it was a nice buy area. And that's kind of where we're at again today. Interesting thing about Amazon is that if you look at, compare Google and Microsoft, both of which are technically good, in a good place. But if you compare January 1st to today for valuations, you're going to see that the PE ratio for Microsoft and Google is about 10% higher now than it was back then. Amazon, 33% lower. 33% lower. And the price of the share of Amazon is roughly the same as where it was January 1st. So share price hasn't changed, but the valuation has come down 33%. What does that mean? Well, it means that Amazon is doing something really well to make a lot more money, and the market hasn't recognized it yet, right? They're willing to bid up Microsoft and Google as a premium on that extra, the valuations are going to bid it up. But for Amazon, the market hasn't caught on to the fact yet, I guess, that you can buy shares really much cheaper now than they were at the beginning of the year. So don't tell anybody. It's our little secret, because we're long Amazon in the live trading room. All right. One last one that I mentioned was BWXT. This is, in my opinion, probably the best of the nuclear plays. It is a nuclear reactor builder. They design them, they build them, they maintain them, and then they own the plant, they own the nuclear plant, and they turn around and sell the nuclear energy that it produces as well. So they've got a great business model to kind of have all the bases covered, and trading at some really good valuations, lots of free cash flow, good growth, good solid investment grade name. Oklo got way too high, came back down. NNE, I forget the name of the company. NNE went way up high, came back down. We've seen some uranium plays go way up and come way down. So this one is a nice steady play on nuclear energy. Nuclear energy is set to grow 15% in the next 10 years, another 50% in the next 15 years. There's 21 countries that have signed on to a treaty to say that we will increase our output of nuclear energy X%, I forget what it is, by the year 2030 or something like that. So nuclear energy, in other words, is in a real upswing, and this is one good way to play it. Okay, now let me show you some on my greens list. I have kind of culled out my greens list. Some of these we are already in. Some of these aren't quite ready to go. All of them have good upside potential and lower downside risk, but not all of them are exactly yet, ripe. All right, so the VST is it's an energy play. I'm forgetting exactly what kind of energy. Is it alternative energy? It's not nuclear, I don't think, but it is plugged into the data center energy demand, and it's a good play. VTR and VST are the two that I like in that space, and it's doing what William O'Neill would call a high tight base. So if you look at the Encyclopedia of Chart Patterns by Bolkowski, and he lists all the chart patterns based on how reliable they are and how less reliable they are. He ranks them. This is the most reliable pattern. Uptrend, 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 sideways base at the highs, breakout, uptrend, uptrend, uptrend. So we're just waiting for this one to break out. Now you can buy it down here at the 50, the pink zone of the rising LRC, just at or underneath the 21 EMA. So not looking that great today, but overall, this is a pretty good place to get on board with a lower risk long. Sophie has come back down to test the 21 EMA. I would kind of like to get us long again. We were long not too long ago in this one, down here in this little wedge that broke out quite nicely. Now it's pulled back again. Just kind of waiting for it to show that it's being bought again. Right now, it's just being distributed. So we don't want to get into it today. Let's wait. We are long AVGO in the live trading room. It's not doing that well today, but it has pulled back to the 21 rising pink zone of the LRC. It should hold this area here and start to get a nice roundup. We're seeing some distribution in some of the semiconductor names, whereas others are getting some good inflows, and the overall index itself is doing pretty well. So I'm not sure what's wrong with AVGO today, but anyway, it is what it is. So UNH is if you look at the bigger pattern here, this is a bottoming pattern, rounded cup with a handle forming. The handle hasn't broken out just yet. This could have been a little handle here, which did break out. Now we're getting a secondary handle up here. And it looks to me like it's kind of doing a cup and handle in the handle, right? So it's all bullish. And of course, this is a company, everybody knows the story, but UNH has some very, very deep value going on here that should serve longer term holders well. And, we were in a long-term play with UNH in the wealth building portfolio in the live trading room, and it hit our target of 340, and then it dipped down below 340, and I had kind of a second thought of putting it back on again. Now we're back above 340, but I'm content actually to just swing trade this one, and I would prefer to do that with UNHG, which is the 2x bullish version of this. RDDT Reddit was just added to the IBD top 10 list. That's usually a good place to note what's going on in the stock. So we had a nice pullback into the rising pink zone. When the market itself was kind of on the weaker side, Reddit has been rallying. However, that is a sharp pullback. I don't like sharp pullbacks. I like soft pullbacks like this one right here. Nice soft rounded bottom pullback. This is a sharp pullback, and it looks like it's reversing today, the 21. So maybe we get another leg lower down into the 50. Microsoft is not in a bad place, but it looks a lot like AMD. So it was a falling wedge, broke out to the side, broke out, and then it didn't really get much traction yet to the upside. Nice big green stick here, and then 4 down days, right, with the market, more or less. A couple of bounce backs. It's kind of between the 21 and the 50, and you can see a nice little trading range developing right here, about 2 weeks worth. And when that breaks out to the upside, we should see a better steady uptrend. And that is a networking play. I like how this is just, blue chip of the blue chips, old tech company that's morphing into more of a new tech company. And it's just solid. So buy dips to the 21, maybe trim a little bit when it gets up to new all-time highs. And we were down there at the 21 again just a few days ago. I like the home building sector as a rebounding play. We are long several of these things in both rooms. We have home builders. We have the XHB. We have the Nail 3X bullish version of home builders and related retail names. And this is in my opinion, this is the number one home builder right now in terms of valuation and growth. And it is nicely moving out of the pink zone up above the 21 for the first time in a week or so. This looks good. Right? As rates come down, mortgage rates come down, more people are going to want to start buying. And there's been a lot of pent up demand that needs to be released because everybody's just waiting, right? Everybody's waiting. Some people that want to sell their home to move into something else aren't able to do that because the rates are so high. People that want to buy and build a new home aren't able to do that. But we're here in Southwest Florida. Pulte is building all over the place, and they're selling like crazy. So there are still markets where Pulte is doing really well. Oscar, right, your health tech play is doing a nice little A, B, C pullback, rounded bottom, right back up today, breaking out of this little pullback trend right there. Today looks like breakout day. Volume's a little bit light, but I like the setup. NVIDIA is one of the better of the semiconductors today. Looks kind of like AMD, Microsoft, just going sideways, right? Testing the top of the range, coming back down to the bottom. I'm not so sure NVIDIA is your best mag to buy today, but I wouldn't kick anybody in the pants for buying it or holding it. At least I'm in long-term shares. I don't feel any great need to get into short-term shares. Datadog is a good-looking software name. So it was, there was a toss-up for me between buying Snow and Datadog as long-term hold, and I went with Snow. I probably will regret that, but I like them both. Maybe I should just add on some Datadog. Big green stick today, so probably not a buy right up here at the top, but it is a nice-looking, as you can see. Hope you can see this, right? Here's your left shoulder, here's your rounded bottom head, and here's your very shallow right shoulder, perfectly formed IHS continuation patterns. Continuation because it's at the top of an uptrend, not at the bottom of a downtrend. And breakout day, really, I wouldn't, if you're already long, hold on to that, raise up your stops. And if you're not long yet, you certainly could get long today. Just that be prepared, you'll probably get a little bit of a better price tomorrow. Carvana, big green stick, and I've been watching this one, and I just have this, I don't know, this mental aversion toward Carvana as kind of a meme play and a joke of the butt of all jokes. But look, in Investors Business Daily Market Surge, they're hitting some really nice looking metrics. Growth is doing really well, sales really well, and I can't really fully explain it. I guess people are just, they've come to recognize the brand as something of value. So rather than being the butt of a joke, where you can put a quarter in the vending machine and come out with a car. But look, you're up here at all-time highs, and you've seen a sequence of higher lows. That's bullish. The rising stacked MAs, 21 above the 50, 50 above the 200. Everything looks bullish, 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 and you're on the verge of breaking out today. All right, I'm going to show you TTDU. This is a brand new 2X bullish version for TTD. TTD is a trade desk. It's an ad tech play, and it got smashed on earnings that were actually pretty good. TTD, and there's another ad tech play I follow, and I'm forgetting the ticker symbol there. Both of them got smashed on earnings, and it just kept going down, right? So when you see a really deep drop on earnings, generally the rule of thumb is you wait 3 days to see if it gets some traction to the upside. And then if it doesn't, you just let it go for a while. Well, this was one you certainly wanted to let go for a while because it just never got upside traction and then kept falling. Now, this is printed not a V bottom, but a rounded bottom, which is bullish. We've recaptured the 21 EMA. It's a big green stick today. Volume coming in at that low peak right there was very good, really, really good. So there's some good stuff going on in this, and on valuation and growth, I think you can buy. In fact, this might even be a good add to the wealth building portfolio. Buy here on valuation, just kind of set the shares aside for a while. But if you're looking for something exciting to trade short term, Keep this one on your radar. Yeah, it's a big green stick today. I wouldn't buy it today, but this one will leverage that move in trade desk. Apple's printing a bull flag. It's not a buy today, but it is getting there. Could be another leg higher quite soon. And the last leg was really nice and sharp. Uh, Bizoon is a Chinese play from my momentum letter. Gone off to a nice start earlier today and then has pulled back, but it's still above the rising 21 after a reversal bar yesterday. Two that aren't really that well set up just yet, but I want to keep an eye on. Coin, which is pretty much of a play on Bitcoin, the exchange that Bitcoin is traded on, among other cryptos. And it's printing a nice looking 3-bar reversal. Pretty good volume coming in today, big gap and go, but we're still under a lot of overhead. And we've got this big gap up here, and gaps do tend to act as resistance, right? Once you get up into them and close above, so we're going to have to get like up above, we're going to have to close above about 345. And it's at 333 right now, so it still has some work to do. But a 345 close should start to edge into that gap, and then things can get really a lot of fun from there. And micro strategy, so we are long micro MSTX in the live trading room. We've been doing a wheel on it for several weeks. We started back in this area here. It was going nicely sideways for us. We were taking 100% profits, and then we had a bad week. Had a bad week last week, but thankfully we're long the shares now because we were put shares last week, and now our shares are doing really well. So we'll see where that one goes. Okay, now that's about all I wanted to do with you all, and I do need to get back into the room, but I do have 5 to 10 minutes to take some chart requests. So I'm going to move Discord off to the side, and while you are typing in your ticker symbols, you can go ahead and do that into the trading main room. Then while you're doing that, I'll take a look at some of the call flow on here. So when I'm looking at black box stocks, I can just sit here. I've got my filters for both stocks and ETFs and puts and calls, but I only want to look at buys. I'm not looking at anything like a bullish put spread or a bearish call spread or someone selling calls against some shares. I want these to be only buys and either at the ask or above the ask for calls and puts. And I have them as a minimum per trade of $100,000 each. So these are the bigger trades. And I'm looking down here for something unusual. Like here's DHI. Look at this. It's a DR Horton, right? One of the biggest builder, and someone bought $1.2 million worth of calls at the 170 strike, pretty much at the money, going out to January of 2027. So this is a long-term position, and they spent $30 on that each. So that, you're looking at a price of $200 per share by January 2027. Now that, that's not a huge move, but this guy is hoping for a lot more than that, I'm sure. But that is unusual. You don't usually see any calls on DH Horton, or for that matter, most of the other homies. And so that's something to pay attention to. Here's Hood. Hood always gets a lot of flow. It's just always interesting to see, is it more bearish than bullish? Well, 3 calls, pretty good size, a couple of puts. Here's a 1.8 million call, 1.4 million. Yeah, there's some good people are still bullish on Hood, which is good. Good to see. Look at this 5-minute chart too. It's just up, sideways, up. Yeah, that's good stuff. Okay, let me see what you're interested in. Okay, there's just a couple of ticker symbols. So let's take a look at HUT. All right, we actually had a. We have a play on HUT and then we got stopped out. I'll have to check my records on that, my spreadsheet. But in any case, it is a run. I don't think that's all-time high. I'm pretty sure it wouldn't be. No, it's not. So HUT is a mining play for crypto, and they might, like a lot of mining plays, they're kind of morphing into other things, right? Because you've got a ton of servers, you've got warehouses, you've got super fast computing power, you've got cooling systems, and all of that lends itself very easily to building out a data center. So a lot of these, like Iran and what's the other one that is doing that? There's several that used to be miners and now they're becoming data centers. And I don't know if that's going to do that. But anyway, here's a nice, let's call it a 52-week high. You've got your A, B, C pullback down to the rising 21. Nice clean bounce today. It's holding near the highs of the day. This is a good buy, right? This is a buy setup. Now your first, of course, your first problem is going to be coming up here at about 38 and change, and it's already at 35 and change. But that's a good 10% move. And when it gets up there, you can trim off some of your position. If it gets up there, you trim off some of your position and you raise your stop to protect even more profits. And that's how I would play HUT. But it is a buy. Yeah, it's a bullish setup right there. Does Etsy have more room to run? Let's take a look. Yeah, well, yeah, it better to look on the weekly chart for this because it is a name that hasn't really been in favor with the market for a long time. And you're going to see much higher prices up here, right? So 310 not that long ago, and here it is at 73. So it's been under a lot of pressure. But I have to say, as these bottoming patterns go, this is a pretty good one. You've got rounded bottoms are always better than V bottoms in terms of establishing a really firm line in the sand. You have a higher low here, and I would say, yeah, just slightly higher low here, and now a breakout of the recent pivot highs. So this is a bullish setup. However, I would remind you of my big green stick rule, and that is that when you have a big green stick, if you buy up here at the top, you are very likely to see over the next couple of days or next 3 or 4 or 5 days even, you're much more likely to see lower prices. So it's just how the market works, right? It's always 2 big steps up and a bunch of little steps back, and then 2 more big steps up and a bunch of little steps back. And sometimes it's the opposite. The market falls really fast for a few days, and then it's just, you get these little bitty bounces, and then it falls really fast again. So I would say if you're already long, it's a hold. Raise your stop up above your entry price to protect some profit. If you're not long yet, I would just give it a few days. But yes, it does have more upside. I would say that is definitely true, especially now with this new collaboration with Shopify and OpenAI. It was just announced. Amazon, I guess we didn't look at Amazon, did we? We did quickly, yeah. Right. So I mentioned this one on Friday. It is a it's a rare opportunity when Amazon is in an uptrend to buy near the 200 period moving average. That happened last week, and now it's already starting to bounce higher. It's still in buy range, nothing extraordinary here. It does have some overhead to work through, however. So right in this area, pretty much where it is right now, about 223, it's going to have some trouble getting up above some volume that's probably going to start pumping back into the stock, right? This is what we call supply shelf. People that bought up in here and are now underwater, when the price gets back up to where they bought it, they want to dump. They want to get out. They throw their shares back into the pool. And if that supply can get eaten up by more and more people that are buying, then we'll sell right through, but that usually doesn't happen. So I can see some sideways churn, chop, a couple of days up, a couple of days down for a while. Then we have the 50, the 21, and another volume shelf right up in this area around 230. So it's got some work to do, but I think if you were to buy it today and hold on to it for a position trade, not a short-term swing, but a position trade into early next year, I think you'd be pretty happy with the result, and you can leverage that with AMZU, which is what I would recommend for more of a, if it's not an investment, go with the leveraged ETF. What else? There is, well, we did Snow. Let's do Cisco. Yeah, Cisco, I remember seeing it, it's a sharp down on earnings. That's never a good thing. Here's your relief rally back up. Here's a big green stick that you did not want to buy because it's right back down again. And then it's kind of up, down, up, down, up, down. So it's printing like a lot of the, we saw this in AMD. We saw this in Microsoft. We see it in NVIDIA to some extent. This sideways trading range, right? For about a month, month and a half. Microsoft is maybe 2 months, and so I don't know quite what to make of that, but I've been saying this quite a while now that I do think that the big seven mags, they're still great investment. They're still great for trading, but you need to buy support and then sell up at resistance, because I think they're good for short-term trades, but I think longer-term swing trade, you're much better off in terms of return. Not necessarily risk. You're going to add some risk, but you're better off in terms of return to look at some of the smaller cap, some of the growth names that some in the lagging sectors like home builders, healthcare, energy. You're better off looking at some of those for bigger upside over a shorter period of time. I think most of the mags, maybe Apple is an exception, are kind of set up to be a little bit on the sluggish side for the rest of the year. They've had a really good run off of the April lows. Now they need to consolidate, and that's exactly what they're doing. Cisco, I'd put that in the same category. Okay, guys, I'm going to let you go. God bless everybody. I'll be back in the room after I produce the video and send you a link, and then we'll go from there. We've got an hour of trading left. God bless everybody. See you back in the room in a little bit. Bye for now.